In the international market, the fear which Night Fintech had identified materialized in the US market. US CPI for May came out as 8.6% versus 8.3% for April. Market participants were expecting a peak in inflation, but they were proven wrong. US 10-year on the back of high US CPI for May is now trading at 3.39 percentage points, which was last week at 295. The 5-year is now trading at 351, 10-year is trading at 339 and 30-year is trading at 335, which is a clear yield curve inversion happening. The yield curve inversion is showing sign of recession. The real fear in the US market is Fed may increase the rates by more than 75 basis points in upcoming June 15 meeting. In the crude oil market, crude is trading at $122.3 per barrel. Short-term range for crude is $119 to $124 per barrel. In the currency market, dollar index is now at 105.07 on the back of safe haven rush. DXY today's range is 104.95 to 105.54. USD CNY Chinese yuan is at 675. USD INR with an intraday low of 78.29. Yes, you heard it right. An intraday low of 78.29 closed at 78.13. Resistance at 77.85 and support at 78.40. Trading strategy for USD INR. Knight Research had been very vocal on USD INR at 78 for the last 2 weeks, and finally it happened in style. Since USD INR at 77.50 was not breached, we had to change our stance that USD INR will breach 78 sooner than we thought, and here we are. We expect the rupee weakness to continue, but RBI may jump in anytime post 78.50. In the domestic market, India's CPI for May is 7.04 versus April's 7.79, which was 8-year high. The real reason for CPI moderation was actually a base effect. Traders placed a large short bets on 5 to 10-year papers yesterday on the back of higher US CPI. Indian bond market's mood will be negative today as well, with US 10-year at 3.39 percentage points. 574 2026 closed at 734 versus 722, 8 basis points higher. 654 2032 closed at 760 versus 752. Again, 10-year was also 8 basis points higher. 667 2035 closed at 772 versus 766. Trading range 654 2032, 6758 to 766. Knight Research view: US CPI has spoiled the mood. US 10-year yield at 339 are worrisome, and Indian bond markets will be no exception. Indian 10-year is capped at 775 for now. We do not see Indian 10-year breaching 775 anytime soon. As RBI expected all the bids for 654 GS 2032 at 752, which gave short sellers a confidence, and now the yields are at 760. We feel the time is right to realign the portfolios and take advantage of higher yields. In the non-SLR category, please start parking your excess short-term cash into mutual funds. We have not advised on mutual funds since April 22, but now Knight Research comes up with an open call to start parking your excess short-term cash to mutual funds. CPs and short-term 13 to 24 months bonds still remain our favorites. Spread expansion in the corporate bonds is likely to play out in the next 3 months, and that may be the time to go aggressive on a AAA 2-3-year corporate bonds as well. For now, get rid of very short-term corporate bonds before the spread expansion starts. That's it for today. See you tomorrow with the new episode from Night Snippets.